Okay, so when it comes to high probability setups, we're talking about order block, supply and demand, they're the same thing, versus low probability setups. What does that actually mean? All right, what does it entail? The way that I trade supply and demand and what makes a zone a high probability versus low probability is that imbalance or gap resting back at the zone. The same thing, okay? I'm just going to show you an example of a setup which I posted over on the Discord yesterday. Our community is free to join for anyone that's interested. The link is down in the description. I missed the opportunity, but it was a very, very good setup. And it's all surrounding multi-chart confluence, marking up the higher base chart and then a lower base chart. That's the strategy that I talk about so much here on the video, on the channel, okay? And in so many videos, okay? So I trade range-based charts, and I always start with my 120 range to depict, figure out, find or form a bias in the market, whether we're moving to the upside or to the downside. And what that really is going to, or how I determine that, is if we're making higher highs and higher lows, then I'm just looking for demand setups. If we're making lower lows and lower highs, I'm looking for supply setups. This is a very easy strategy. If you understand and learn it, you could be on your way to profitability and making money. The strategy is easy. If you're looking to maybe make $500 a day, maybe even $200 a day, it is very, very simple to do if you, first and foremost, understand market structure. Secondly, you've got to master which way to trade, up or down, based on the structure of the market. The structure, market structure, is going to let you know which way to trade. Once you have figured out how to read the charts correctly, then the strategy is going to come into play and allow you to take the trade, systematically or in the correct way. You have to think logically. Should I be trading short? Should I be trading long? So let's take a look. I'm going to show you a trade example like right here. This was a demand zone. But before we do that, I just want to show you right now that what led me to want to look for an opportunity to trade back in this zone. Again, I missed this trade setup yesterday, but I did take a trade, which was I typically don't trade like this, but it was a support setup. Again, I talked about on the channel, 98% of my trades are surrounding supply and demand. That is the bread and butter, the cornerstone of how I trade. But if I see a setup that is just kind of, it's irresistible in a sense to where I know I need to take that trade based on rejections in the market, I'm going to take it, okay? Simply put, all right? I don't care, what other people think in reference to how I trade. I just have to pull something out my arsenal sometimes, okay? But 98% of the time in which I'm talking about and showing examples of here on the channel and instructing in a sense, which I'm not a teacher. I'm just simply saying that sharing my personal experience and strategy and how I trade. This is why the channel was formed. But I'm going to trade based upon what I see. And, I advise anyone to do the same. I'm not saying you have to sit here and trade supply and demand all the time. If you can pull something else out because the market may not be pulling back to key areas of supply or demand or certain zones, and you know what you're doing, and maybe you have another strategy that works for you, then, there's nothing wrong with bringing things into the fold, all right? I recommend that in the past. If you have something that you can add on into your trading plan that may work for you in times where supply and demand is not working its best, or we're not getting great pullbacks or retracements to key zones, then trade it, okay? But again, you need to know what you're doing. What I was looking at first was the structure of the market. The market was making these higher highs and higher lows. I talk about reversal signs, where the market is, if you got the market coming from where it's making higher highs and higher lows, bullish to reversing to the downside, that pretty much that pattern that most traders talk about, the reversal, the head and shoulder pattern, or the inverse head and shoulder if you move from the downside back to the upside. The market will show its hand and means a reversal. It started reversing in this area when it started breaking structure lower, taking out and breaking areas of structure to the right and left. You got a left shoulder, head, and then some right shoulders being taken out to the downside. Yes, this is a bearish movement or a trend reversal back to the downside. But when it starts to make its approach back to the upside and takes out major area of structure, this is a major high. And you can see that there's aggressive buying here, pullback, and then more aggressive buying to the upside. That lets you know the market is still bullish, definitely after it takes out a major area of structure. Again, I'm going to show you a beautiful demand setup. And when it comes to the actual strategy, all you need to really do is try to make $250 a day, $500 a day. Or if you want to trade more, meaning leveraging more into the markets, then you can make $1,000 plus a day. Whatever your goal or your heart desires, then if that's part of your plan, then tackle it, trade it, okay? I'm just showing you a simple way to make $500 a day for anyone that trades the E-mini futures in specific, because all you need to capture is just 25 points out of the the NASDAQ futures, which is the E-minis, on a daily basis. It's pretty simple. That's 100 ticks, all right? And the NASDAQ kicks off hundreds of points a day, even when it's in a range market, pretty much, okay? Because it moves pretty liquid, it's pretty thin, so it moves pretty quick. Again, this was aggressive buying to the upside, all right? Bullish sentiment, pulls back, went from bullish to bearish for a slight bit, breaking structure above, so let's say this area right here at 567, boom, breaking structure right here. When it does that, we have this aggressive push to the upside where we got bullish momentum to the upside. It was already bullish here. Lots of momentum to the upside, okay? Pulls back and then breaking structure back to the upside with lots of bullish momentum to the upside, lots of buying power. That's what I mean by saying bullish momentum to the upside, lots of aggressive buying. We're just looking for a key area of demand for the market to pull back to. And that could be any key point where there's a demand zone resting on the inside of this big swing here. This is a major swing off of a higher 120 range chart, okay? So I'm looking first and foremost structure, okay? All right, bullish to the upside, breaking structure above a major high. First area of demand, okay? Now, this is a leg to the upside right here. And I talk about, most times looking for that 50% or lower, 76, 72 point whatever, percent of a movement of a leg. Now, I also say in the past that we don't control the markets. It's the market makers, all right? We're trading based on probability because that's what this business is all surrounding, all right? So we never know where they're going to reject it. If you've got multiple demand zones, we never know. We just have to trade based on what is going on and what takes place. Now, because this was a major structural break to the upside with a lot of aggressive buying to the upside, if the market gets back here, you think I'm not going to take my shot going long if it reacts at the zone, not directly off the higher base, but when I move down to my lower base chart and I have identified a 24 range zone inside of this 120 range zone, I'm going to take my shot. If it's giving me the rejection, if it's giving me some reaction there, and it all makes sense because I'm already looking at structure. It's telling me it's bullish to the upside, breaking this major high here. Pulls back to this key area of demand where there is a gap, okay? The gap, the imbalance is the most critical part to the strategy other than structure of the market, which way is it breaking, okay? Break a structure above this area here to the upside. There's a gap resting right here back at the zone. There's an imbalance resting right there. The market loves and it has to feel areas of imbalance and it loves to react at them. So when it gets back to this zone here, you can see the first tap into the zone occurring around about 9:45. Now, when I move down to my lower base chart, which I'm going to show you here in a minute, the first tap into the 120 range zone here, the market didn't fill in or come back to a 24 range demand zone. So I'm just going to wait patiently for it to make its approach back. Okay. So we're going to scale down here in a moment. So, but again, we're retracing back to the 120 range demand zone at the breaking structure because we're bullish. Let's move down now. Now, what are we doing here at this point? On the 24 range, we see, again, we're retracing here just like we saw on the 120. Now, the key difference is that, yes, this is the first tap right here. But I look to my left-hand side of the chart, we need to see an imbalance resting at a 24 range zone just as well, meaning we want to see a 24 range demand zone on the inside of our 120 range demand zone. Okay, the big box, large rectangle is our 120 range demand zone. If we look inside of this larger zone, where is the first area where you see a 24 range demand zone? Well, it's approaching here, nothing to the left hand, not till we get down here, because the high probability demand zone that rests which is the 24 range zone, rests on the inside of the 120 is right here because there's an imbalance on it. Remember, it must have an imbalance or gap. Same thing back at a zone. Just how we identified on the 120 range zone, the 24 range has that imbalance or gap resting back at to it. So when it gets here the first time, nothing there to the left. Okay, it pushes back up. Then it comes back down around about 9:50, about 10 o'clock to 15 minutes later, and it taps that that demand zone where there's a demand or a demand zone at with a imbalance or high probability zone at with that gap. Aggressive buying, pulls back, bullish momentum to the upside. Lots of bullish momentum to the upside, and this creates that demand area resting back here inside of the 24 range zone. Makes sense. This little area you see right here is this little demand zone resting right here on the 120 range. It's just on the 24 range. you're going to have more movement. It's going to like more price action because it's on a lower base chart, okay? But still, there is a gap attached to the zone, back at the zone, what makes it a high probability zone, that imbalance, all right? The market reacts at it. Here we go. Reacts at it, and we take the break and the close of the candle. If you notice here, if you got in aggressive on this trade, let's say you got in aggressive on the first candle break of the bullish candle here, right around 493, okay? Or wait for the break and close, maybe around 500. The market goes up all the way up here on the first move to the, well, as it moves to the upside here to 21,582. And then before pulling back, okay, you can see that there. So picking up 25 points, let's see how many points that is. Let's say you got in here at 92. Well, let's say you got in here at the break and close at 500. It goes up here to 82. That's 82-point move. Picking up 25 points of that move, okay, or even 20 points of that move to the upside is fairly easy, all right? So that's going to be 80 ticks. 100 ticks is going to give you that, at least that minimum of $500 a day. 20 ticks is going to give you $400 a day, and you do that systematically each and every day. That's how you're going to compound that account, all right? But again, we're looking for high probability order blocks, okay, of where there's aggressive buying it, where there's a gap or imbalance resting. Again, the critical part of the strategy, is there a imbalance? Is there that gap resting back at the zone? All right, because that's where most times the market's going to come back to and react at. We bring everything into the fold. Higher base chart markup, lower base chart markup. Both charts have the imbalance or gap resting back at the zone. We've got a recipe for, a great setup. Okay. Those are the ingredients that we need to make up this beautiful recipe that's going to allow us to be able to become profitable on a daily basis. But you got to be patient on these setups. I'm not taking every little thing in between. I'm reading the chart and saying, this is a bigger movement. Think of it like this. Some of the best opportunities come if you wait and be patient and wait for the major structure breaks, okay? Just like right here. The market made a new high at the break of this major high. This is a major high now. If it comes back here, all right, you say, well, that happened, nothing happened. It didn't break that key area or that major high resting up here at 683, which was the high of the day on Friday, which was yesterday. So, okay, wait for patiently and see if it does. If you can get into a big move like that where it breaks the major structure and then pulls back to a key area of demand on the higher base chart and you get into a trade, imagine picking up 40, 50, 60 points of that, okay? All right, just one trade for the week. You're done for the rest of the week, all right? So, I mean, if you do the math, really, let's say you were able to pick up 50 points of that. Well, we already know 50 points on that, okay? Let me bring out my calculator right quick. I'm just going to quickly show you guys for anyone that don't believe me. 50 points, okay, times 4. That's 200 ticks times $5 a tick, okay? That is trading one contract, all right? If you trade 2 contracts times 2, that's $2,000 on one day out of 5. So if you're just looking to say, hey, I want to make a minimum of an extra $1,000 a week, well, if you made $2,000 extra a week by trading one day out of the week, looking for a big move on a major breaker structure off of a higher base chart, picking up $2,000 on one trade in one day out of the week, that's going to give you roughly over a little bit of probably $8,000 or more a month. Just think of it that in terms of that way, or scale it back and look for smaller opportunities if you choose to, without waiting for the major breaker structures. But I'm letting you know, the most beautiful setups, okay, are going to come when you have the major breaks of structure, okay? All right, and sometimes you can take major breaks of structure even on a lower base chart. All right, so we move down to a lower base chart here. Let's just go and take a look here to where, let's see if let's take a look here. Just say the market was moving to the upside. All right, let's take a look right here. Let's see, breaking structure higher, breaking structure pulling back, breaking structure pulling back. This is a major high resting right here at 623. We're bullish to the upside. Break structure here to the upside. If the market comes back to some area and rejects that, we're looking to take a trade, right? Well, it came back here, reacted right here. All right, maybe you pick yourself up something here, but you also have to be mindful here that there's gaps resting below this little swing right here, which is a demand zone. So there's gaps resting here. The market can also test that. And as you can see right here, it reacted on the zone here, but then it came down to this zone right below it, reacted off of it just as well, and then went from, let's say, 598, 597 on up here to 614. Okay, but we're moving down to a lower base chart. You got to think in terms of just as well. The lower you start moving down on your charts, the scalps are going to be quicker, they're going to be shorter. You're not going to be able to probably stay in a trade long enough because you're moving down to a lower base chart. And again, you got to be mindful of what's above you just as well. Are there areas of supply resting that above me now if I take a trade like right here? Yeah, there is right here. Okay, so the market pulls back. You get your few points off of there right there. You got to get out because there's supply resting right here. Understand that. Okay, all right. So I'm telling you that if you wait for the major structural breaks, you're going to look for, most times you're going to be able to get in or capture, the points that you need or pick up some points by doing that. Those small little minor structure breaks to the upside or the downside, you can definitely make some, profit off of those. But when you start scaling down to a lower base chart and taking trades off of minor areas or minor structure breaks, those trades are going to be very short lived. Got to understand that because the market is still trying to figure out, is it going to break structure to the upside or made this high here, made this low, make a lower high, and then break a major structure to the downside right here, this major low below, say 480 right here. It comes down and breaks below this area. That's a major structure break to the downside. So just want to throw that out there to you guys. It is definitely doable, but just wait for the high probability setups off of these key areas of supply and demand or order block zones. To anyone out there who is a elite channel supporter, all right, or if you want to join and become one, if you want to join, it's only $6.99. Okay, what do you get? You get the tons of trade breakdown videos with all the quality content surrounding trade setup after setup that I've posted here on or on the Discord. If you want to join the Discord, it's free. Both links are down in the description portion of the video. The first link is the Discord. The second one is going to be how to become a elite channel supporter. So if you want to become one, click on that link below the Discord link. 2 tiers are going to pop up. Make sure to choose the one for $6.99. That's a month. And that's going to give you direct access to all the trade breakdowns, the video playlist, as well as a great video that I covered on market structure. You're basically supporting my efforts as not only a trader, but as a content creator. And in return, I'm giving you back these perks and rewards. It's all through the YouTube tier membership program. But it allows me to be able to break things down so that you can grasp the understanding as a trader and a content creator, so you can take trade setups like this. Now, it's up to you whether you want to do so or not, but it's a very inexpensive fee. I know a lot of people probably pay that price or more for a price of a cup of coffee a day. You add it up on a week. Let's say you spend $10 a day on a nice cup of coffee, all right? How much is that going to cost you 5 days out of the business, 5 working days out of the week? $50 a week. Okay, $50 a week. Okay, maybe some of you spending $5 a day. That's $25 a week. I'm talking about something that costs only $6.99. It's just a way to support me as a content creator, but I'm giving back so much quality information in regards to the trade breakdowns, because that's where the meat and potatoes, the substance to how I trade, it really unfolds and comes together at, because I break the trades down so that you grasp an understanding of what my mind thought process was walking you through these setups, okay? Talking to you about where to place your stop loss, where to place your profit target at, what structure looked like, why I took that trade, bringing everything into the fold. So if you are interested and want to become an elite channel supporter, the link is down in the description portion of the video. Outside of that, if you have not taken time to go ahead and subscribe already, click that sub button, that subscribe button right now. Make sure to join the group, to join the community. Also, turn on your post notifications so you do not miss any of the uploaded content that I pretty much post every single day, just about, unless I got something going on. But outside of that, if you found value in today's video and you've learned something, it's helped you, make sure to drop a like by clicking that thumbs up button before you click off the video right now. Take care and have a great weekend.